Hey guys, this is a market update. 3 key things I want to talk about in this video: inflation, regulation, and also risk on versus risk off. Well, I see this as almost the eye of the storm, and if you play this right, this could be a very good short-term trade. But for me, a long-term investor, I just can't see any other reason not to invest in crypto with the way things are going. But we'll get through that in this video. I want to quickly come to the crypto prices that we're seeing today. Now, a lot of the risk and the risk off that we've been seeing because of political events, I don't want to get into that on this channel, but essentially looks like things are going to work themselves out for the most part anyway. And so what we've seen is a huge pump up of all prices because risk is back on. So I want to talk about that firstly: risk on versus risk off. What is crypto? Very clearly risk on. Okay, we've seen that crypto prices have essentially fallen from their highs, along with the Nasdaq and the S&P, and equities, which are usually seen as risk on. Some risk off plays, have done better. So let's just assume that crypto is risk on. Everyone says Bitcoin is a store of value and risk off. In my opinion, it will be, but not right now. It's still mostly a risk-on asset, but this is really key. So when you're investing and you're looking at Bitcoin versus Ethereum, understand where you want to sit and how much risk you want to take. That's really important when you're putting things like this together. So what we can see is that now we're risk on again because the political situation is a little bit better. What have you seen? You've seen Bitcoin go up 4.6% in the last day. But Ethereum is almost double that, right? 7.6% on that move. What's that telling me? Well, it tells me that Ethereum trades more like a very risk-on tech stock because it's more volatile and it goes up more when people are going risk-on. Bitcoin, obviously, even though it is mostly risk-on right now, is actually slightly bigger, slightly harder to move in a bigger sense. And so what we're seeing is, a smaller move, but we also saw a smaller move to the downside. This tells me that Bitcoin has a bigger proportion as a risk-off bet, and that makes sense. In my opinion, in 10, 15 years, 20 years, maybe whatever it is, Bitcoin will be the ultimate risk-off asset. It is the only thing that I would hold if we had Armageddon or some nuclear holocaust or whatever. Bitcoin is the only thing you can hold. And so for me, it is risk off, but not yet. It's still mostly risk on now, but becoming more risk off over time. Put that information to work when you're putting together your portfolio and you want to see, hey, how much of one versus the other do I want to put in there? Now coming to the short term, we are risk on again. And I want to talk about inflation later because this is really important in terms of how it is affecting my short-term outlook. So when we're coming to the short term, this is the TA that I've been doing. So you can see these 2 lines here. I want to make this simple. So we have this kind of bottom support level, and then we have this top resistance level. You can very clearly see that we hit this resistance up here, which was the previous resistance, after a sell-off as well. What you've seen is we've hit the resistance, we've come down, but then we're testing this resistance once more. This is a pretty good area for a short-term trade for me personally, in that what we see is we see the low, and then we see a higher low, or we should say, a higher low, and then another higher low, right? So this is actually the 3rd time we're printing a higher low from a sell-off. We have the low, higher low, higher low. This is basically a reversal uptrend that we're seeing, but we're seeing a huge amount of resistance here. What I would do if I was trading short term is, maybe see if I could go in a long trade here and see if we actually break through this resistance, a quick trade. I want to show you this on Binance as well, with some slightly more complex and slightly more levels right here. Same chart, this is Bitcoin. What you can see is we've come off this resistance here, and then we actually didn't even make it down to this support level at 41.2. So you can see that we kind of just hit it right here, and there's been a lot of FUD around recently, and it seems to not really have affected Bitcoin that much. And then you can see we're testing this resistance right here, and if we break through this, this is easily going up to maybe 46, 47. So as a short-term trade, that's probably what I'd look at, because we are in a short-term uptrend, even despite that FUD that we got over the last few days. That's how I would trade if I trade short term. I don't trade, I invest over the long term though. If you do trade Bitcoin, definitely check out Bybit. I'll leave a link to them in the description. You can get up to $4,000 as a deposit bonus on the platform. They'll put that in your futures trading account. You can go ahead and trade with up to $4,000. Now I want to come to inflation, because this is the big story and the thing that has really seen the market sell off since the start of this year. Now, not because of inflation, but because of inflation being so rampant that the Fed now has to act and basically up interest rates and smack the market. That's basically what it's done. But is it overblown? So I want to go over that. Also, if you do want to check out my crypto investor course, check the link in the description. Got over 150 videos here, private Discord groups, and new content is added over time for free for existing users. I'm adding and planning some new content for this right now that's going to go over some really cool aspects of the crypto industry. So, make sure you check out for that one. This is inflation expectations, or what the market thinks the Fed will do on the 16th of March. This is the key meeting when they're going to basically raise interest rates for the first time since they've knocked them to zero after the pandemic. Now, earlier when I was making videos in kind of late January, the market was expecting a 25 basis points, so that's 0.25% hike in interest rates. Now the market has moved. Why this is important is because what actually happens versus what the expectations are is what moves markets, not what actually happens, because everyone is basically guessing what will happen, and whatever, if they guess right or wrong, this will move markets. So before, the market was expecting 25 basis points. I think this was like 80% of the market thought it was going to be here. You can see that the probability of a rate hike is 100%. Everyone knows it's coming right now. But the market has become ultra hawkish and basically expects the Fed to raise rates by at least 0.5%. You can see 63% of the market now thinks that a 50 basis point hike, so 0.5%, is coming as a wallop in March. Why this is important is because, in my opinion, if the Fed doesn't raise by 50 points, but only 25 points, we are about to see a monumental pop in risk asset prices. The reason for that is because the market is ultra hawkish, and if the Fed doesn't meet the market in that respect and is actually more dovish, raising rates at a slower rate, basically it means more money sloshing around, lower rates again, and there's going to be a pop in markets. This is absolutely key. I don't know what's going to happen, of course, but the market is calling or expecting a 50 basis point move, and if it doesn't come, you're going to see a massive pop in the markets. If a 50 basis point move does come, I don't think you're going to see too much in terms of a sell-off, because the market expects this now, and so the prices that you can see right now in the market reflect what the market thinks the prices should be in a 50 basis point hike environment. The third aspect of this video is regulation, why I think that we're moving into an era where crypto adoption is just going to be absolutely mass adoption. BlockFi came out the other day. Look, they've been whacked with $100 million fine. That's not great. That's a massive fine. The SEC is basically, kind of throwing its weight around, saying, yeah, come at me and try and do this again. We'll smack fines on you, right? So fair enough from them. But what's happened essentially is that BlockFi were fined $100 million. Wow, that's a lot, but they have regulatory clarity now over what they can offer. BlockFi is obviously a lending platform where you can earn yield on your Bitcoin and Ethereum. So in America, they're not allowed to offer this product anymore, but they can come up with something called BlockFi Yield, and this will pay you interest in the States, but this will have to be a security. So they're going to have to register this product as a security with the SEC in the States in order to offer a yield account for US citizens. From what I read, if you're international, this won't affect you and you can still use the interest account. So interesting to see. So now we know essentially that the SEC will regulate these as securities. We're assuming that they're going to get this securities product accepted. We're not sure when, but BlockFi Yield, if you're in the US, you can basically use that when it comes, and it will be a security. That's absolutely fine by me. Just get on with it. Regulate this stuff. Enough already, right? We've been waiting. Just do it, and let's get on with it. I don't see any problem with any crypto being considered a security. So what? People buy stocks. It's not a big deal. It's just that you can't invest in ICOs and things like that, which obviously cuts off a lot of the money that, these startups can get. But that's just the way it is. And most of the crypto world is going to be a security. Bitcoin, in my opinion, will not be. It will be a commodity or property because it's just different. It uses proofs of work and it's just very different. But that's how I see things. And regulation is coming. This is more, it has to happen, and so that is when really the big money comes in and starts to use this industry, and that's when it goes from 2 to 20 trillion as a market cap, in my opinion. Anyway, that is my opinions on this. If you want to get some free Bitcoin or a deposit bonus with Celsius and Nexo, check those out because you can't do it with BlockFi right now if you're in the States. And also check out the Crypto Investor course down in the description as well. I'm adding some new content to that. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.